You are listening to ChartingWealth.com's weekly review and forecast for the week beginning Tuesday, the 31st of May 2016. It is great to have you with us. We had an interesting week that we're going to review. We always start with IYY on our weekly review and forecast. The weekly review and forecast will go this way. We'll go through all three of our indexes, the total market represented by IYY, SPY, the Standard & Poor's 500, QQQ, the NASDAQ 100, and then gold. After we look at the weekly chart on each of these individually, we'll then go each one to the daily chart and talk about what happened over the course of that week. And then lastly, we'll review the news that moved the market during the week and what events we might have over the next week that might move the market. Okay, let's jump right into IYY. That represents the entire market. What happened? Well, we got a green up candle for the week after three red down candles. Started off back on the 29th of April. And again, each of these dates is the end of the week. So that was Friday, the 29th of April. We actually had a red open box candle, pretty much a spinning top, followed by down candles. Well, we have a green up candle for the first time in 4 weeks. Now that green up candle has a little bit of a down tail on it and a large up wick on it that actually shows us that it was about twice the upward movement that the market settled out with on our Hinkin-Ashi type of candlestick. We saw a tick up, that is a divergence between the MACD and the red signal line, and we pretty much saw the derivative oscillator hold steady. It didn't really change. It had been going down on all those prior weeks, and it leveled off. It took a week off. So where are things? Well, they're where they already were. We were already in a confirmed up move on the weekly chart. It looked like we might be heading toward a down move, but we never call it right until we see it, until it happens. So the market crossed over going up back on the 4th of March. Actually, it started moving up as per our candlesticks back on the 19th of February. We didn't have a confirmed crossover going up until the derivative oscillator flipped over at the same time as the MACD. The MACD is the big daddy that tells us when the market flips over. Happened at the same time that the derivative oscillator flipped, which is always a good sign. That was followed by 1, 2, 3, 4, 5, 6, 7 up weeks, then the 4 down weeks, and now another up week. Now, when we see this type of candlestick pattern, it typically means that it's going to go on. If we go back many, many months, typically it's 3 to 5 weeks of up movement. We saw one solo back on the 27th of November. We had one solo up week followed by some down weeks. So let's pay attention to this up candle. That is important. It is an up open box candle. So that is significant, and we need to pay attention to that. It could mean that the market's going to still go up, but there's a lot of drag on things. We're going to talk about that when we get to the news portion of things. Now let's look quickly at what went on each day in the market. Well, we saw the market started off on the 23rd, and it had already shown up movement at the end of the prior week on the 20th of May. When the market opened on Monday, it was up movement, about the same amount of up movement of a Hinkin-Ashi type candlesticks that we saw on Friday, but then a huge up move on the 24th. That was Tuesday, the 25th. A big, big up move. I'm sorry, that was Wednesday the 25th. So lots of up movement on Tuesday. The big, big up day was on Wednesday. More up movement on Thursday, followed by more up movement on Friday. Technically, the market ended up 0.41% for the day. The derivative oscillator and the MACD crossed over on the daily chart on the 24th. And continue to move up from there. So we're in a confirmed up move, of course, on the big chart and on the daily chart. All right. And again, this is our weekly. Again, this is what we review when we do our weekly review and forecast once a week. Now let's look at the S&P 500. Looks somewhat similar to the total market. Again, the S&P 500 is represented by SPY, the exchange traded fund, And have to remember that the S&P 500 is a lot of the volume of the market anyway. It's 500 big stocks. And of course, it was up for the week. Had never crossed over going down, just continued the up movement. Derivative oscillator heated up a little bit. It grew a little more. If you remember, it was flat on the IYY, the total market. So we see we have an up candle after 4 weeks of down movement. Now, if we go to the daily chart, what do we see? Pretty much the same as we saw with IYY, crossover going up on the 24th. MACD switched over at the same time, and then 4 more days of up movement. So that is where we are on the S&P 500. Let's see how much different the Qs is for the weekly movement. Now the Qs had approached and was getting ready to cross over at the end of the last week on the 20th. Appeared to be getting ready to cross over going down. But it turned around and bounced off the signal line on the MACD. We are still negative on the derivative oscillator, but we can see that the Qs originally, and this is the NASDAQ 100, started moving down on the 22nd, the week ending the 22nd, followed by down movement on the 29th, week ending then of April, and down movement on the 6th of May. Then there was up movement on the 13th of May. Some more up movement, really sliding sideways on the 20th. These were green closed box candles. They are not strong up movements if you know how to read Hinkin-Ashi charts. If you don't, go to our website, chartingwealth.com, and look at the latest training that we put up. It's about Hinkin-Ashi type candlesticks. Then we had the big green box up movement that we saw with the week ending on the 27th, Friday the 27th of May. Now let's look daily and see what we see. We see on the daily chart, the Qs had crossed over before the total market and the S&P 500 back on the 19th. The Qs had already been in positive territory on the derivative oscillator all the way from the 11th of May, but crossed over going up on the 19th, actually the 20th. And the derivative oscillator continued to heat up. We saw up movement on Friday, the last Friday, the 20th, and then throughout the course of the week, up movement. The strongest up movement during the week was on Wednesday, the 25th. So the Qs, just like the total market, the S&P 500, the NASDAQ 100, the Qs, is up on both the weekly chart and the daily chart. So that is where we are. Now, lastly, we're going to go to gold. We're going to take a look at it. Gold was down for the day on Friday, 0.82%. Gold crossed over going down over the course of this last week, the week ending the 27th of May, crossed over going down on the weekly chart, and it also switched over on the derivative oscillator. So gold is in a confirmed down move on the weekly chart. Now, when we, and again, gold had moved up. Gold's actually been in a confirmed up move since the 8th of January, the week ending then. Gold had moved up strongly and then pretty much topped out on the 11th, the week ending the 11th of March, then slid sideways for quite a while, popped up a little bit more to its high of highs during this past year on the 6th of May, and then rolled over going down. It then, well, I say it rolled over going down. It actually slid sideways for 2 weeks, and then over the course of this last week, it really trumped over going down. We had both two dojis actually on the week ending the 13th of May and the week ending the 20th of May. And then there were red dojis, then it headed down strong. Now, if we look at what's going on the daily chart, what do we see? On the daily chart, we see gold crossed over on the daily chart back on the 10th of May, slid sideways for a few days, and then really started its progressive down move on the 18th of May and has continued to move down well below the 2-day trend line and has continued to move down. So gold's confirmed down on both the weekly and the daily chart. And again, the total market is up on the daily and the weekly. The S&P 500 up on the daily and the weekly. The Qs up on the daily and the weekly. That is where we are as we end the week on the 27th of May, and we go into the last day of the month. Don't forget, markets are closed on Monday for Memorial Day, and we'll be opening on Tuesday, the 31st of May. Now, let's take a look at what affected the market over this last week, and it is some interesting news. We see that Q1 US GDP was revised upwards from 0.5% to 0.8%. We also saw that the flash purchasing managers indexes were soft. We also see that once again, the European Union has kicked the can down the road when it comes to the Greek debt, and oil pushes up to around $50 a barrel. Now let's talk about US GDP being revised slightly higher. Now the US economy we're being told that it grew slightly faster in the first quarter, so they revised the data on Friday. The economic output advanced again to a sluggish level. I would not call 0.8% of annual growth anything to brag about, but that is where we are. Now, when we start looking at the global growth, this is where we need to have some concerns. We're being told by the folks at JP Morgan that its Global Composite Purchasing Managers Index is declining. It will decline in May to 51. And that is, again, showing that our growth across the globe is slowing down. We talked earlier about the Greek debt deal. They've tried to come up with a new thing that just continues to be a drag on Europe and, of course, on the Greeks. We look at oil. It is rallied. That is one of the reasons that the market is allegedly up, because your price for fuel is going up. Again, try to figure that one out. Regardless, we pay attention to what the charts tell us, don't we? But we also want to pay attention to what reality is, because at some point, reality does kick in. We'll continue to watch the charts, but we'll also realize that reality does matter. Now let's talk about what's going to move the markets this next week. Don't know that we're really going to have a lot. Of course, the UK and the US are closed on Monday. Japan is going to report its retail sales, but there's going to be no stock market open in our country if you're in the US, on Monday. We're going to also see on Tuesday, there's nothing happening on Tuesday as far as any kind of big reports. On Wednesday, manufacturing PMIs are going to be reported globally. Again, watch for that. We've told you what you can expect there. And then we're going to see on Friday, U.S. unemployment reports are going to be released, and service sector PMIs are going to be reported on Friday. So manufacturing PMIs on Wednesday, the 1st, and service sector PMIs on Friday, the 3rd. Again, let's pay attention to what's going on both those days and whether or not those reports are going to have any big impact on the market. Who knows how strong this up movement is? We look at our charts. It appears to be pretty strong, but let's see just how strong the overall global market is and what the impact of that news might be. Again, this is not super stirring news unless it's super bad. So we'll continue to pay attention, continue to watch. Remember what we've talked about here. If you have any questions, concerns, problems, we love to hear from you at Charting Wealth. All you got to do is go to the website, sign up for our daily and weekly email. We'll email you every day the podcast, the video cast that we have on our coverage of the markets. And again, our 3 indexes, that is the total market, the S&P 500, the NASDAQ 100, and gold. And on the once a week, we will send you over the course of the weekend, you will get our weekly review and forecast, where we actually look at the weekly chart, the first and only time that we do so each week, so we know where the big trend is, what we call the double long trend, and then we can help plan and have an idea what that big wave's doing and how the other waves, particularly the 2-day chart and the half-day or 4-hour chart, are affected. We love to hear from you. Sign up for our newsletter at chartingwealth.com. If you would like to really help us out, go to iTunes, give us a 5-star rating, and subscribe to one or both of our podcasts. We have a video podcast for the weekly review and forecast that you can sign up for. We also have the daily audio podcast. We appreciate all the fine comments you've given us. Please, again, give us a 5-star rating. Say something nice about us if you want to help us out. A little quid pro quo. Thank you so much. Hope that you are having or have had a wonderful Memorial Day weekend. From chartingwealth.com.